Welcome to TradeTheMBI.com. This is John. This report is for the 26th of January. Well, we had the reset here of the shakeout. We were talking about the orange dipping, prepping for an explosion. We were seeing it also on our intraday charts as a couple of days ago. The rally started to begin and we were able to follow it from there. I also had pointed out to you we had the lovely MBI Opus, also interestingly enough, opens up a new Starhawk for this version, and the other one completed itself as well, going before. Simply it was already two entries into it. So in line with expectation, what the market really was looking for was that there was going to be a continuation on stimulus talk and whether or not that was still on the table. And I think that they're starting to absorb the concept of the administration and having complex views. I know that the market is reassured that it has its representation in plenty of Goldman Sachs individuals going to be on the cabinet and or interrelated to economic decisions. And so the market is connected in this, and that's why we've been seeing a significant move as they realize there's just going to be a diversity of opinion within the administration. It's very different because you're not getting a homogenized viewpoint, and so it's a little bit difficult for the market to digest, but I think they're starting to come around to it. This isn't the end of it. I mean, obviously you can see the NASDAQ, it started much earlier and didn't have the same pause that the S&P did. The Dow was way out ahead of everything, but we knew that it was headed for 20,000. I actually had mentioned to, a couple of years ago about 30,000. I know sounds astronomical, but not really. You get a significant series of years of growth, and we're not talking this, anemic, barely sustainable, but 4+%, and it's not inconceivable. Euro, certainly stronger. No question about that. The interesting thing about this at the euro point, though, is that if the market continues to rise, the dollar is going to still have substantial upside pressure. It's going to be tough for the euro to maintain itself. I know the Brit exit debacle certainly helps the euro a little bit because it means that Britain isn't going anywhere just yet. This is no surprise. We've been looking for continuation of bonds lower. We still have that target down here, 113. I should just color that magenta, though, so that it looks more like a range for the downside than upside. We had no concerns that bonds were going to be coming up any higher. And this all goes back in the 140 range where we were like, time to be short TLT. And some people say to me, well, do you actively short that? Well, you don't have to. Buying a put from that standpoint would be just the same thing. USO, likewise, continuing its malaise. That could even see some downside pressure. The expectation, though, is that you might see an increase in economic activity, which would support where oil is. And then we get into the tax reform and how that impacts where oil prices are going to be. Certainly, retraces in gold are definitely going to be opportunities because gold is going to be a consistent winner to the upside. There's our 5K. Let me reduce this last couple of days. You see how clean this run has been. Now, we actually had it from all the way back here. Intraday, we talked about it off the adjusted shakeout that we were creating as it starts to move higher. And then even this little dip that came down here was clean. I mean, fine from a short standpoint. It wasn't a whole lot of movement. You went all the way from, around 78 range to 74, like 4 points, but we could see the turnaround coming with that beautiful reset of the orange coming back through there, and then immediately cyan moved below red, and it took off. So even from that standpoint, getting in a little bit later still presented plenty of opportunities from the 75 to almost 2300 range. We actually get up there at 99.50, right at the edge of it. So you break through that hurdle, and I think that my 2350 call is going to seem like, oh wow, how in the world would you know that? But come on, we've been talking about it for quite some time. Nothing unusual for us. So we just continue to take the action as it comes at us, keep dissecting it. We're going to reach a point where there's going to be a little bit of a correction back in through there as they take some of these significant gains. That won't be a surprise. We'll see it on these 5K charts long before it takes place. But healthy run so far. I don't think there's anything we can complain about as far as that goes. As always, though, look for me on the Skype chat. Trade well.